Hello traders, I hope you are doing well. In this video we are going to talk again about Bitcoin. Let's recall our forecast about the Bitcoin that we made on last YouTube video. As we can see, after 4 weeks, our forecast based on the price action realized perfectly. The $30,000 level is holding the price, establishing in this way the new lower low. Now we expect a correction that will create the new lower high and then the new impulse in downside direction. As we told on the last video, we are going to start to buy again at $20,000 till $14,000 if the price drops that low. Buy the fear and sell the greed, don't forget that. This quote is essential for crypto market. Be smart and think different from the crowd. Let's be optimistic now. The Bitcoin has huge potential in upside direction. We just wait for these crashes of the market to purchase this coin at cheaper price, that's all. Make sure to like and subscribe. This encourages us to make more helpful videos. Now we are going to observe different chart of Bitcoin that will give us a deep insight of what's really going on despite the price action and technical. This chart is called stock-to-flow model. This model treats Bitcoin as being comparable to commodities such as gold, silver, or platinum. These are known as store of value commodities because they retain value over long time frames due to their relative scarcity. Stock-to-flow ratios are used to evaluate the current stock of a commodity, the total amount currently available, against the flow of new production, the amount mined that specific year. How to view the chart. On the chart, price is overlaid on top of the stock-to-flow ratio line. We can see that price has continued to follow the stock-to-flow of Bitcoin over time. The theory, therefore, suggests that we can project where price may go by observing the projected stock-to-flow line, which can be calculated as we know the approximate mining schedule of future Bitcoin mining. The colored dots on the price line of this chart show the number of days until the next Bitcoin halving event. The red line represents the maximum of days until the next halving, and the purple one the end of it. This is an event where the reward for mining new blocks is halved, meaning miners receive 50% fewer Bitcoins for verifying transactions. Bitcoin halving are scheduled to occur every 210,000 blocks roughly every 4 years, until the maximum supply of 21 million Bitcoins has been generated by the network. That makes stock-to-flow ratio higher, so in theory price should go up. This has held true previously in Bitcoin's history. The stock-to-flow line on this chart incorporates a 365-day average into the model to smooth out the changes caused in the market by the halving events. We find similarly with 2013. This model shows that the bull run is not over and will continue in upside direction. This is not a definitive conclusion. We are going to analyze other models. If you want to learn more about our strategy and be part of our premium channel, we offer a mentorship program. Check the link on the description to find more information. Next chart is realized hold ratio. How to use this indicator. The indicator is able to identify with great accuracy the price high of each of Bitcoin's previous macro cycles. It identifies the market top within a few days accuracy. Realized hold ratio entering into the red band signals that the market is approaching the top of its cycle. This has historically been a good time for investors to take profits in each cycle. Unlike other on-chain indicators, realized hold ratio does not give a false signal of a cycle high in April 2013. This gives it a unique advantage over other on-chain indicators. The realized hold ratio, it's moving at the same zone as previous pullback that happened in 2013, which means that the bull run is not over yet. Next is relative unrealized profit-loss model. This indicator is derived from market value and realized value, which can be defined as market value, the current price of Bitcoin multiplied by the number of coins in circulation. This is like market cap in traditional markets. Realized value. Rather than taking the current price of Bitcoin, Realized value takes the price of each Bitcoin when it was last moved, that is the last time it was sent from one wallet to another wallet. It then adds up all those individual prices and takes an average of them. It then multiplies that average price by the total number of coins in circulation. By subtracting realized value from market value, we calculate unrealized profit loss. It estimates the total paper profits losses in Bitcoin. This is interesting to know, but of greater value is identifying how this changes relatively over time. To do this, we can divide unrealized profit loss by market cap. This creates relative unrealized profit loss, which is very useful to track investor sentiment over time for Bitcoin. How to view the chart? The key principle of this tool is in the ratio between market cap and Bitcoin investors taking profit. When market cap rises much faster than profit taking, we see that the market is overheating, one could say due to investor greed represented by a red band. For the strategic investor, such times have historically been favorable to take profit. We can break down different percentages of Bitcoin relative unrealized profit loss to determine what stage of the market we are in. This can be advantageous for the long-term strategic investor. The net unrealized profit and loss metric has pulled back below the 0.5, indicating that the market currently holds an aggregate of 50% of the Bitcoin market cap in profitable coins. This level has acted as a support in all three of the prior bull cycles, and this is actually the first touch in the 2021 market. If we compare this pullback to 2013, we have similarity, but the unrealized profit loss of 2013 dropped as low as 26%. We currently are between 50 to 40%, and to reach the same value of 2013 we expect the market to drop more, before continuing in upside direction for a long term.